What's happening, XRP Army? 2026 is shaping up to be the most explosive year in crypto history. And if you're not paying attention to what's happening right now with XRP and the XRP ledger, you're about to miss the biggest institutional transformation we've ever seen. What I'm about to show you is going to blow your mind, because while everyone's panicking about price action, the foundation being built behind the scenes is absolutely massive. Right now, there's a great divergence happening in this market that most people completely miss. On the surface, you see fear. Retail investors are down 47% from all-time highs. The fear index is screaming panic, but underneath all that noise, at the core of what's actually being built, there's incredible strength. Institutional money is flowing in ways that tell a completely different story than what you're seeing on social media. Before we dive into the shocking numbers, make sure you smash that like button, comment your XRP price prediction below, and subscribe for daily content, because what I'm revealing today could change everything you think you know about where this market is headed. Let's talk about what's really happening with institutional adoption. The DXC Alliance just reached $5 trillion in deposit reach, 5 trillion RLUSD. Ripple's stablecoin that just launched is already sitting at $1.4 billion in market cap and just got listed on Binance. The more liquid RLUSD becomes, the more places it's listed, the better the entire XRP ledger ecosystem functions for on-chain liquidity. And here's what most people don't understand about institutional adoption. This isn't like regular DeFi where anyone can trade with anyone on Uniswap. When BlackRock builds their tokenization platform, it's permissioned. When major institutions interact with blockchain technology, they need to know exactly who's using these systems. They can't have anonymous users earning yields and then potentially using those profits for illegal activities. There's massive liability there. This is where permission domains become absolutely critical, and I'll explain why this changes everything in just a moment. But first, you need to understand what Ripple is actually building here. Ripple isn't just looking at cross-border payments anymore. Yes, Ripple Payments is part of the equation, licensed end-to-end cross-border payment management for fund flows, but that's just the beginning. Ripple Custody is launching as a full-service institutional-grade custody solution for digital assets, stablecoins, and real-world assets. That's the game changer. That's where massive adoption happens, because every institution wants this capability, and they're about to get it. The XRP ledger is positioning itself as critical infrastructure for the future. RLUSD integration gives direct access to a dollar-backed stablecoin within core banking environments. It's regulated, it's trusted, it's next-level infrastructure. But here's the secret sauce that most people overlook. You can't just have a stablecoin. You need that native cryptocurrency, XRP, providing settlement finality for any transaction moving value. That's what makes this entire system work. RLUSD is backed one-to-one, no games being played. The deposits are sitting in short-term treasuries. Reserves actually exceed requirements at 103% with monthly attestations. And the oversight? New York Department of Financial Services. It doesn't get bigger or more legitimate than that. Brad Garlinghouse himself said the Binance listing is extremely positive for liquidity depth. And that's what this entire game comes down to. Who has the liquidity ultimately wins this war of attrition. Smash that like button if you're following along. Drop a comment with your thoughts. And make sure you're subscribed, because what comes next explains exactly how institutions will flood into this ecosystem. Permission domains are the regulatory key that unlocks public blockchain adoption for institutions. This technology allows institutions to conduct transactions on public blockchains without exposing sensitive data. Domain owners define the rules, and only credentialed accounts can participate. Think about BlackRock for a second. They can't let some anonymous person invest in their tokenized funds, earn yields, take profits, and then potentially use that money for crimes. BlackRock would be held responsible. Regulators would ask, did you know who that was? Do you know who you're interacting with? If the answer is no, that's a massive problem. Permission domains solve two critical issues simultaneously. First, they define rules and credentials for participants. Second, they allow institutions to conduct transactions on public blockchains without exposing sensitive data. When you hear about institutions adopting blockchain technology at scale, this is exactly where it's happening. And this is where you're going to see absolutely explosive liquidity growth. The roadmap is clear. Permission domains are here. Permission dexes are next. Then lending protocols on the XRP ledger for institutional borrowing and lending. It's all coming together like puzzle pieces forming the complete picture. Now let's talk about the institutional divergence between smart money and retail price action, because this is where it gets really interesting. Bitcoin ETFs, they're seeing outflows. Ethereum sold $351 million, but XRP ETFs have seen $1.3 billion in inflows. Yes, some of that is because they're new and didn't have existing positions, but we're seeing constant, steady inflows, and when this market turns bullish, those inflows are going to become absolutely extreme. Look at the top funds involved. Bitwise, Franklin Templeton. These are real institutional players. Sure, you don't have BlackRock or Fidelity yet, but Bitwise and Franklin Templeton are no joke whatsoever. Whale accumulation is happening, while exchange-level supply sits at the lowest level since 2018. Those tokens are moving out of trading wallets on the open market into ETF wallets, cold storage, and long-term storage. You literally cannot buy those XRP anymore. Lower supply available creates pressure that will absolutely make a difference over time. Before we talk about price targets, make sure you've hit that like button, commented below, and subscribe so you don't miss what's coming next. Technical outlook shows we've had a major drawdown, but we're defining a floor right now. I'm looking for a breakout in the first quarter of this year. It has to get going now because it's not happening in summer. If we're going to see that next leg up, it's happening in Q1 of 2026. The infrastructure is built. The market is just waiting. The plumbing is complete. RLUSD provides compliant liquid settlements at 1.4 billion in market cap, and that number is going to explode higher. ETFs are absorbing flows, and that pace is only accelerating. Coinbase put tons of money into lobbying. Ripple put tons of money into lobbying. They're working together, even if they take different public approaches. One side pushes for a better deal. The other side holds everyone together. And ultimately, I believe it gets done this quarter. They need to push it through because the closer we get to midterms, the less likely anything happens. But if we see a surprise regulatory breakthrough, or if prices suddenly take off, something big is coming. Usually prices react first, then boom, regulations follow. We need to protect this industry long term. We need to protect the classification of coins as non-securities. There's too much money at stake for this not to happen. And when it does, especially with the XRP ledger and all the infrastructure getting positioned perfectly, we are ready to absolutely explode. 2026 is going to be a massive year for cryptocurrencies. We just need to make our move, and I think it's going to be bigger than anyone expects. Thanks for watching XRP Army. Until next time, stay strong and keep accumulating. Peace.